Hello and welcome back to Infinite Banking Step by Step. This is part 10 in the series. If you missed the first several videos, please go back and start at the beginning. Last time, we talked about the process of submitting an application for a life insurance policy and what to expect in underwriting. Today, we're going to talk about the unlimited potential of the infinite banking idea. So, we're going to talk about things like investing, estate planning, charitable giving, and so forth. As a quick disclaimer before we get started, this video is not tax, accounting, legal, or investment advice. Perfect Spiral Capital is capable of giving financial advice, but only after you've sat down with your agent and had a real one-to-one conversation about your specific circumstances. This video is intended just to give you some food for thought and help you investigate further what may be appropriate in your life. If you'd like to work with Perfect Spiral Capital for your financial decisions, we're more than happy to help, and you'll find a link to work with us in the description box below. So let's briefly just talk about investments. There are so many things in the financial world that you can do to grow your wealth besides putting money in the stock market, besides mutual funds. I'm talking about real informed investing into things that you understand, not payroll deductions that are shoved automatically into a very limited menu of mutual funds. Okay? Okay. So, can you use your infinite banking policy to finance investment purchases? Why, yes. Yes, you can. Can you use it to finance a business acquisition? Yes. Can you use it to finance new equipment for a business that you already own? Well, yes, again, you can. Could you use it to buy land and then make no payments whatsoever on the policy loan for years, only to later sell the land at a profit and use that profit to pay off the policy loan? Well, yeah, of course you can. Nelson Nash himself did this. So again, the reason that this is called the infinite banking concept is because you have a need for finance. The need for finance is limited by your imagination. It's an idea, a concept, and there are an infinite number of ways to implement that idea. We're using a specific tool, a dividend-paying whole life insurance policy, or really a series of policies. As your success with this system grows, you'll want more policies. That's a natural consequence of that. But the idea itself is just to pay interest, to recapture interest that you're paying to third parties and redirect that interest to an entity that you own and control, as we talked about earlier in this series. If you can buy investments and use those investments to help you grow your net worth and grow your assets and grow all of the other aspects of your life that you want to grow, then you should. You can and you should use your policy to finance your investment activity. If you do this, you will be able to finance business acquisitions and get real hands-on investment experience all throughout your life. If you're doing that and your peers are simply shoving money into tax-qualified plans with regular payroll deductions that they never look at or think about, you will win every time. You can become completely financially free well before retirement age. You do not have to depend on the government-defined age of retirement. And so you will win every time. Okay, let's shift gears and talk about the death benefit on the policies. At some point, the insured person is going to pass away, the policy is going to mature, and that means large cash payouts are going to go to someone or something. So, for many people, that means a large death benefit check is going to be delivered to the surviving spouse or perhaps surviving children. And that's very important. It's going to give them the cash infusion that they need to pay for final expenses, to take time off from work to grieve, to figure out what's going to happen with babysitting, to look for another job, to pay off debt, etc., etc. We should not minimize, and I do not intend to minimize, the critically important role that the death benefit plays. This is life insurance. That's the primary purpose, is to provide a death benefit. If your agent is from Perfect Spiral Capital, then we have a commitment to be there with the check in person, barring some kind of natural disaster. And so that's some additional peace of mind. It's not just waiting for it in the mail. It's, hey, I'm booking my flight. Hey, I just got out of the airport. Where are you? I have a check for you to help deal with this horrible situation. Death benefit is also critically important because, generally speaking, it's tax-free. If it's a death benefit of $1 million, that means a $1 million check. It's not 1 million minus whatever your highest income tax bracket is. Now, however, at Perfect Spiral Capital, it's our goal to help you foster continuous growth in your assets. That means that although it seems really far off right now, perhaps, someday you may be in estate tax territory, inheritance tax territory. You may need to start thinking about things like gift taxes. You may need to start doing some estate planning. I strongly encourage estate planning, and all that means is just being more specific about what is going to happen with your estate. In other words, who gets the house, who gets the land, who gets the car, who gets your collection of 80,000 baseball cards, who gets all the stuff. If it's not specified, this can lead to major problems and resentment for future generations. The thing I like to say is that if you don't make a plan, someone else will, and you won't necessarily like that plan. Oftentimes, that someone is a judge from your state. It's going to go to what's called probate court. Now, the death benefit on your life insurance policies can also fund a trust. A trust can even own life insurance policies that you have no control over. Strategies like an ILIT, or an irrevocable life insurance trust, can be used to minimize those nasty taxes, estate taxes, inheritance taxes. It can help spread out gift taxes, etc., etc. You may even want to use a trust to ensure things like government benefits. There are very specific rules around particular government programs. Things like special needs trusts may be needed. And it's just important to have these conversations and plan ahead so that things don't get completely out of order as soon as something happens to you. For example, imagine a situation where you want to leave money to a grandchild instead of to your direct child. There is what's known as a generation skipping transfer tax. And in order to avoid that, because it's 40%, you want to set up some kind of a trust environment to mitigate that problem. Yes, unfortunately, the government has all kinds of interesting ways to try to get your assets, and many of these are focused around when someone passes away. If you want to avoid the negative consequences of this, you need to do some planning. A will, or a last will and testament, is a very important first step, but it is not the end of estate planning. For many people, it's only the very beginning. Okay, perhaps you would like to leave a significant sum of money to charity. You and your spouse agree that you should leave 10% of the death benefit on a life insurance policy to a specific charity. The other 90% would go to your surviving spouse. If you have a $1 million death benefit, $900,000 is still quite a bit of money for your spouse to deal with end of life expenses. And 10%, or $100,000 in this example, is a significant sum of money that could be left to a religious organization, a medical research facility, etc., etc. And again, getting all this planned out and properly documented will ensure that what you want to happen actually happens. And by the way, if your family is about to inherit or has just inherited large lump sums of cash from previous estate planning done by the last generations, well, don't you think that if you directed those funds into properly designed infinite banking policies, that those policies could be leveraged over your lifetime to meet your financial and growth goals? Do you think that maybe this is how wealthy multi-generational dynasties manage their assets and ensure that they stay wealthy? You have access to the same tools that they do. It's just a question of using them. If that's something that you would like assistance with, that's what we're here to do. I hope you found this video helpful. In the next one, we're going to look at how to decide on a budget for your first policy if you're just getting started, and how to find an agent that you know you can trust. You'll see a link to the next video in the series appearing on the screen in just a few seconds. Thank you so much for watching, and I'll see you in that one.